welcome to the show. It is Old School Friday, where Rich and Ange are back. And it's such a great day because the bromance, is it over?
Well, let's go straight to a poll, right? Let's not mess around on this Friday, June the 6th. Whose side are you on? Is it Musk or Trump? Straight 50-50 poll coming up on your screen now. I know who I'm with.
I know Phil's going to sneak in. Time will tell.
But in case you've had a heavy night out last night, you've only just joined us, you've got no idea what we're talking about. Let Angeline and I run you through the latest truth bombs on social media.
I'm going to be Musk. He's going to be Trump. So time to drop the really big bomb. Admiral Donald Trump is in the Epstein files. That is the real reason they have not been made public. Have a nice day, DJT.
I don't mind Elon turning against me, but he should have done so months ago. This is one of the greatest bills ever presented to Congress.
I hope Jesse 14 is here because I'm bringing out an imaginary chainsaw. Wise words, wise words. Capturing Trump's past criticism of extending the debt ceiling.
Look, Elon and I had a great relationship. I don't know if we will anymore.
You do that movement really well, actually. Elon saying in reply to a post suggesting Trump's impeachment and J.D. Vance as a replacement. Yes.
Yeah, so then Donald Trump goes on to say the easiest way to save money in our budget, billions and billions of dollars, is to terminate Elon's governmental subsidies and contracts. I was always surprised that Joe Biden didn't do it.
Musk then announcing on X, in light of the president's statement about cancellation of my government contracts, SpaceX will begin decommissioning its Dragon spacecraft immediately.
And then, finally, Donald Trump coming out with Elon Musk is acting out of self-interest. He's upset about the removal of EV subsidies. So, Donald Trump going for Tesla, stock down 14%. Donald Trump going for SpaceX. However, Elon fighting back and saying, look, you need SpaceX. We literally taxi your astronauts to the International Space Station.
Yeah.
So if you want to wipe out the International Space Station, go right ahead.
And also the threat of who's going to carry your payload, right, up to space continually if we're going to do this whole Mars business. It's just is this the beginning of a real messy, live public bromance breakup? What will it do to shares? Well, let's have a look. You're going to whack up Tesla.
So, well, the interesting thing is the Germans do not think so. So Tesla already bouncing 7% this morning. And we are, so we're seeing on the Frankfurt Exchange pre-market, Tesla trading around about the $300 mark. Okay, so $300 Tesla back. We won't see it in that today yet, but that's up 4.6% this morning. And that's because Trump and Elon are having peace talks today. So he had peace talks with Z yesterday. He had talks with Merz, and now he's having peace talks with his supposed ally.
He's having peace talks with everyone in general, right? And then,
It's the art of the deal.
It is the art of the deal. Paul Taylor. Rich, don't try Amdram. Boise saying, do they know this is live? And Julian saying, who will Trump deport next?
Steve Bannon has already questioned Elon's status as an American citizen and said that he should be deported to South Africa already.
Oh.
I mean, honestly, it is different world, absolute joke. So, on that, do we have anything else on today's show?
We definitely do. It's coming up. Right, and we have overnight action next with myself and Rich, of course. Old school style. We'll take you through everything from what is expected from the jobs report and also Circle. If you were watching that yesterday with me, what a debut on the New York Stock Exchange.
And then we've got Joachim Clement coming in.
Or Joe.
With Joe, yeah, that's easier. And he's going to be chatting to both of us. 20 past 8, and warms them up, and then I go in hard at 8:35.
And then at 9, we've got the opening bell with Rich and myself, with Elliot Harris, who's going to come to us and tell us all about what to expect from on the volatility front ahead of that jobs number and into the coming week.
And what is that at 9:20?
Yes.
We ask, what questions are you going to have for producer Phil to give to Angeline?
Slam them right here, and we will get those questions answered.
Ask@ig.com.
And at 9:40, the great Issa Bhattacharjee comes back on to give us a heads up to the top tradable events that are in the coming week. So plenty there. Do slam the like and subscribe button, because we're nearly at how much, I hear, Phil?
893. We need 7 more to get up there. So wacka wacka, why is the market ripping? The market is ripping because peace talks are on. After the jobs number today, Elon and Trump are going to have a phone call. They are not trusted to meet in person just yet. So yeah, so that's why, you know, it was all a little tiff on a Thursday afternoon and evening.
And the interesting thing is, are they going to have it on one of those apps where a journalist is, mistakenly allowed in and...
Oh yeah. Oh, to be on that phone call, my goodness me. Right, let's go into overnight action. Let's see what's going on. Right, now producer Phil's back today, so of course he must have made an economic calendar for us, hasn't he?
Yes, he has. Has he?
Let's have a look at these expectations for the jobs number. It's a big one. It's a big, big day.
130, right, is the expectation?
Big, huge day. That's right, 130,000. So let's get your estimates into the chat here. Who's higher? Who's lower? Let's get your estimates in. I am sitting at 162,000.
Nice. Hot number that, Rich. I am actually going to go 100, and I think it's just going to be on that print. So maybe 135. I'm not that hopeful.
Oh, that's very in line. I think the only thing you can promise with the non-farm payrolls is that they don't end up in line.
I just think that, this time round, everything's going to be a bit flat.
Yeah. Right, and then unemployment 4.2%. So let's have a look then at the estimates of the other stuff on my economic calendar here. We've got average hourly earnings. Remember, that one's important as well for inflation. Average hourly earnings at 3.7%. Participation rate 62.6, and the unemployment expected at 4.2.
Now, what's interesting is I read somewhere that the participation rate this time round is going to be the interesting one to watch, because, all the Doge, those that put their hand up for, basically voluntary redundancy, they're all going to be, past using the money that they had for that redundancy and now kind of coming back into the market looking for a job. So that participation rate might be a bit more of an interesting print than usual.
Yeah. It's going to be a big, big day because we'll talk about it more later with Joe. But if this number is sub 100, that is going to ring the alarm bells. Now, the ADP number suggested it would. Weekly jobless claims yesterday suggested that would be a weak number. But maybe, I don't know. It's just a survey, remember, so it can be volatile. But that unemployment rate, that's what I see going up to 4.3%. And that will be taken negatively as well.
Just also putting up this interesting story, if you want to read more into that print that we're expecting today. Everyone expecting that this number could just show how employers are willing to bend before they crack. Lots of people in previous months have already found work, when they decided to re-enter the job market after taking their voluntary redundancy. But right now, it sounds as if that, things are shakier.
Let's scroll past the competitor's advert.
And that, the labor market, has been such a source of strength for the US economy, hasn't it?
Yeah.
But there is this concern now that we are going to start seeing weakness coming through, right? And the stop and start, hire and fire start to become more of a thing. Right, the poll is out. The poll results.
Excellent. Producer Phil managed to piss me off already on a Friday morning. Only time will tell is not an answer to this.
Told you I was going to get it in somehow.
Musk, 52% Musk. So that's right. That I am the same. I am absolutely on Musk's sides because this big, beautiful bill is an ugly piece of work. Perhaps the ugliest bill that ever existed. Adding $3 trillion to the deficit is absolutely insane. And it's just so typical of politicians that are only around for 4-year cycles to be that ill-disciplined and irresponsible with the future of the country. So Musk, yeah, he's got my vote. Not the biggest fan normally, but yeah, certainly in this one he's.
Yeah, you don't normally like the whole Tesla Musk thing. This is interesting.
Yeah.
There's just change of heart here. Change of heart.
No, I don't have a bias on Tesla.
Well, for those of you wanting to find out what is going to be said on that peace talk later on, I can confirm that across the newswires there is no date. I can't do that Trump accent with you. There is no time, but everyone's looking at today as the date, so there's no time given.
Politico have said it's today.
Yes. And if you want to rewind and find the most recent joint interview that they both did on X, formerly Twitter, of course, that would be February 18th. So if you want to just refresh your memory before today's, today's, we don't have a time, but it's going to happen today, according to Politico. Andrew McKelvey there saying the big, beautiful bill is big and beautiful for gold. I agree.
Yeah, absolutely. And Bitcoin as well. Bitcoin was down 3% last night at 100,000. And I saw a tweet come out. If you're selling Bitcoin because the world's richest man and the President of the United States are having a public battle, then you really do not understand anything about this asset.
The more uncertainty, the more of clashing of this kind of geopolitical uncertainty too. That's just going to drive digital gold higher.
Yeah. Right, great moves last night. But I think we did go out. I don't know if you subscribe to our channel. Some of you do, 47% of you. But if you did subscribe to our YouTube, you would have seen a short that we put out on Wednesday when Tesla was trading at $334, warning you that this was a real risk to the Tesla share price. And on the very first message that Elon put out.
And I'm going to whack that up for you so you know where it is. On the homepage, just go to Shorts where Rich mentioned, and here you are. You can find all our shorts there, and that's the one he's talking about. Here we are.
So yeah, so we put that out on Wednesday. Tesla was $334, but this is a win for human minds because the algos got it so wrong. The Tesla share price was up 3% and the algos were trying to push it higher and higher on momentum. And they could not fathom what the repercussions of one tweet could be from Elon. And the algorithms got it completely wrong. And you saw Tesla eventually get absolutely crushed yesterday, down 15%. Elon personally lost $34 billion in his wealth yesterday. But as we say, looking higher this morning, already bounced 7% from the lows, trading around about the $300 mark in pre-market trade in Frankfurt.
I can tell you someone's coffers that got much, much larger yesterday. And that is the CEO of Circle.
Wow.
Yeah,
What an
Jeremy Allaire is his name. I hope I've said that right. Allaire. But its IPO closed at 83.23 on the New York Stock Exchange, and that was 168% rise from the offering price. I've been told by producer Phil, do not bang your pen, Angeline, because it can be picked up. Yeah, it was incredible, and this is the first ever, Trader Friends. If you guys are wondering why I am bringing this up, it is historic. It is the first ever stable coin IPO.
Unfortunately, there wasn't really a chance to trade that because it opened, about $70. And you would have had to been really quick to get there because within 15 minutes, it was at 88. So you can see it traded at a high of 94 before closing at 83. IPO is so volatile, so volatile. So yeah, unless you were in that IPO, we wouldn't have really had a chance.
Now, what's also interesting is that, Circle is really closely watched because since January this year, guess how much in terms of USD coins on the Solana blockchain it's minted. Just have a guess. Trader Friends, have a guess. Bang your guesses here because it was much larger. This number was much bigger than I expected. $8.2 billion.
Wow. Great guessing competition. Now, talking about guessing competition, let's look at what we've had so far for the expectations. So reminder, I'm at 160, Andrew's at 135, Steve Davies at 103,000, and we've had Julian at 98,000. He's going low. Maturin 168, stealing my thunder a little bit there from on the high side. What else? What more do you guys think? Let's hear what Waka Waka thinks. Let's hear.
Yeah, get it in. Get your job report numbers in. Monkey Man, has Monkey Man got a number?
115 for Neil. 115,000.
Everyone's lowballing me. Yeah, David, Boise, I think it will not be spectacular. I think we're going to start seeing it get really, wow, Monkey Man, 90.
Cat amongst the pigeons there.
Lowballing it
50.
there.
I would love to see the market this afternoon. Please come in 50,000 because that will really, I think we could see down 2%.
Yeah.
On 50,000. The ISM services has pointed towards it. ISM manufacturing wasn't great either.
No. I think maybe further towards the end of the year, we might see those sort of numbers, Poppy, but maybe not so much now. Jesse 14, good morning. Guten Morgen, under 100.
Yeah, go with that.
Who's Shrimp Fred?
Theo van Barthold, 100. What a great name.
Yeah, it's very posh indeed. 110 there. So, lots of, let's talk about Broadcom as well. Broadcom was interesting.
Go on then.
I'm going to bring up the chart.
The expected move was 7% or 6%. I think it had been kind of crushed. And it came in under that.
Yep. And also, what was interesting about Broadcom is that we looked at the shares yesterday. This is the 1 hour chart here. And I looked at this, didn't I, with you guys, with Jolie Lepselter at the end. We gave you options and also strategies using technical analysis. And I did say that if we break through this area of interest where I've circled and I've shown in that rectangle there, and you see the oval that I've shown you at the bottom of the RSI, so what to look out for was, if we get across that level, we are then going to see this come back towards that trend line that was drawing there. So I drew that yesterday to illustrate this, and that is essentially what happened. We broke through the area of interest and came back towards that trend line. Seeing a bit of resistance there. This is the hourly chart. So we saw resistance at around support, sorry, at that point. What is interesting about Broadcom is that it reported revenues of $15 billion. This is a 20% rise, but yet we had this move there. And part of it is because of concerns over its growth prospects, but also it's had such a huge run, right? Look at that. It's had such a huge run from
it really
early
has.
April.
Now, talking of huge runs, and it's a special app because we've had Friar Tuck come in with their guess for the non-farm payroll, 130,000. Robinhood, what a run Robinhood stock has had, going from $30 to 72. That's since the start of April. So what an incredible move there from Robinhood over that time period. 130% rally from the lows that we saw then.
Do you like silver as well? I mean, silver's gone, yeah? Just showing you silver here.
1 second before we go. Cam, you were right. My cup of tea had cold milk in it. Can you go make me another one, please?
Oh, is that what? The comments around it looking like...
Yeah, they were saying, what's wrong with your cup of tea? It looks like it's got dodgy milk in it.
Yeah.
It's because I put cold water in. So yeah, thanks, Cam.
I thought it was your new dodgy oat milk regime.
No.
Showing you the daily chart on silver, just very quickly, because silver has been going, as Dylan Rattigan mentioned, cuckoo bananas. Cuckoo bananas, I'm going to take that as a technical term. Cuckoo bananas this week. So if I have a look at these big pillars of green here, showing, the jump on Monday and then the jump on Thursday as well. It's now up 1.3% there, and silver jumping to the highest level in 13 years following the gold rally.
It was certainly all the chatter yesterday on the WhatsApp groups. Excuse me. So apparently silver was in a range of about 28 to 35 bucks for about a year. As such, a proper breakout implies a minimum of 7 bucks, so up to 42. But we had a comment on positioning. So the bottom line is that the trade is not crowded yet at all. ETFs have added 26 million ounces year to date, and the other flows have been relatively uninteresting there. So the ETFs hold 900 million ounces, and that's been well over 1 million before in 2022. So yeah, gold's large big break signaling a new cycle was roughly at 2,000 an ounce, and then it ran 70% in 18 months. A new similar bull cycle in silver would take it to $70.
Boy, hey. Right, we've got a break coming up, but don't go anywhere.
Oh, this is my favorite bit of the show. It's Guess the Chart. Yes.
Phil won yesterday.
Phil did win yesterday.
Are you sure this isn't insider trading? On the poll, on the guess the chart.
So is it a stock, is it an index, or is it a commodity, producer Phil? It is a stock, and is it British? It's a British stock. Right, here we go. We're going to go for a 2-minute break. Cam's refused to get me a new cup of tea, so I'm going to go and fill that. And by the time I get back, I want a few guesses of the stock on the screen, please.
Hey, welcome back to Opening Bell. All your guesses coming in thick and fast, but is producer Phil going to
4
win?
seconds, people.
Come on.
4 seconds.
Come on, you still have time,
Listen, the clue is, this stock isn't all that it used to be, even going back a week. This stock is not all that it used to be, or even all that it was on Monday.
Is the hint going to be all that glistens? Has someone got it? Put it up, put it up.
Got it.
Hey.
Well done, Poppy. Anglo-Americano. I actually didn't realize it got as low as £18, even 17.70 it looks like there. But yes, Anglo-American, look, it's done absolutely nothing. If we managed to take that chart back, of course, you'd see a spike up to, what was it, £28? So this is, yeah, Anglo-American. Good one. Which reminds me, shall we have a look at Valterra quickly? So Valterra, remember the spin-off, which was Anglo Platinum. And you can see that one there, bottomed on Wednesday, Wednesday on the close at 26.96, and it's now trading 7% higher. So there was a buying opportunity in this one this week. The stock really bouncing strongly.
And it says Anglo has about 20% interest in Valterra Platinum voting shares. I believe that's the figure, just under 20%. Let's have a look at some of
your bell, Ange?
Yeah, I've got the bell right here. Someone's broken it though, Rich. I don't know who has, but someone has broken it over here. 8, 7.
Never has a new bell been needed
5,
so much.
4, 3, 2, 1. Here we go. Right. Let's have a look. Whoa, we are seeing quite a lot.
Poppy just admitted that he cheated?
Poppy.
No.
You can't use ChatGPT for this.
Oh, disqualified from all future Guess the Charts. Right, let's have a look at what is moving early this morning then. It is taking a gamble on N10. You'd be up 75 basis points this morning. NatWest up 30. And we just refreshed Diageo on the downside, down 60 basis points. Obviously, a lot of people on the zero alcohols yesterday, last night, out and about in London.
Were you out about in London?
I was not. So, yeah, no non-alcohol drinks for me.
I had a 0% Guinness last night. So
did you?
That's one to Diageo.
Oh, okay.
Which is why I hold Diageo, but it's not been kind to me. Diageo's not been kind overall.
Yeah, £19.40. Last I looked, that was £22.
Yeah, it's not done well, people. So I'm looking to come out of that one.
Right.
Let's have a look at some of the others on the losers list as well. Bunzl down more than 1%. Relex, this is one that I can talk about with Joachim when he comes in. Down almost 1% there. I have that in my pension. And also the Anglo's down 0.2% there. Poppy, you cannot use ChatGPT when... producer Phil says he's not happy about that. On the winners list, it's really shaking. SSE, darling, up 1.5%.
I think we need to zoom in there, Ange.
Yeah. Rolls-Royce also up 0.75%.
That's better.
And Smith & Nephew up 1% as well. Speaking of Smith & Nephew, for those of you that trade this space, Procter & Gamble coming up with huge job cuts recently. Joining the likes of Microsoft and Meta and all the rest as well. So it looks like, even in that safe consumer space, it's not exactly safe as houses anymore.
What is SSE on the year now? That's I'll get the chart up if you want to keep those prices up there.
Yeah. Persimmon also down slightly on the mining front. Fresnillo down. It's up 0.5% rather. Persimmon up 0.25%. Let's talk.
Nice 10%. SSE up 10%, and you've had a 2% dividend there as well.
Yeah.
So it's a strong one.
Some of the headlines out this morning that we haven't yet, covered, that's crossed the wires. Canal Plus confirming its EBITDA and revenue outlook is on track. It also said it at higher than expected cash level. And also, interesting, Trainline said it's been selected by Rail Delivery Group as a tech supplier. Let's have a look on the German side. Here we are.
Yeah, just quickly on that before we move away from the UK. Away from the numbers, talking about legal in general at an interesting level. And Neil, you're absolutely right. We've got the big red move on the left-hand side was the announcement of the deal. And it came right back off again, remember? And now it's gradually eking its way back up the stairs, 256.80. I wonder if we'll see that 265 level again by the end of the year. That would be interesting.
Let's move on to Germany now, shall we?
Yeah.
Okay, here we are. Germany, here we go. I'm going to zoom in for you. Bayer leading the winners ball there, and Vonovia as well. Total up 0.75%. Andrew McKilvey, you're Total Energies kind of person. I can't remember, one of you is. Hanover Ray up 0.33%. And Rheinmetall still riding higher there. Let's have a look on the losers list. Infineon Technologies down almost 8% there. A lot of chip makers earlier in the week getting slammed, including Infineon and ST Micro as well, amid the tariff concerns. And Mercedes-Benz and also Porsche easing off there, coming lower, 0.5%.
We're just waiting to get a proper quote in Tesla. So remember, Tesla, if you ever want to trade at 8 a.m., Germany is your one to look at. But we're just waiting for a proper quote there. I've waiting for the PCMs to send me one through. I know Luke Moore watches the show on a Friday. He's going to send us through what the trading desk are seeing there. We think that is about right at the 282 level, because that takes us back up to 300 in the US dollar. So a strong rally in Tesla, because the bromance might be broken, but they might stop bitching at each other on social media after the peace talks later today.
Yep. And for those of you that were out on the lash or drinking 0% yesterday, just a reminder, those moves there marked by online tit for tat between Musk and Trump. US plans to scrap those tax incentives for electric vehicle buyers.
Now, platinum having a move today. That is interesting, up 2.3%. We haven't seen that for a while. Really, I wonder, is that on the death of electric vehicles?
I think so, because definitely, as our Twitter friends often remind me, and I say this quite a lot here, that we do have this big trend move, and you see it with the PGMs, you see it with platinum. EVs completely knocked off the agenda once Trump 2.0 started. The whole EV play
Can't be that basic, can it?
It's really, really tied to confidence, this market. And if you listen to the music out of Volkswagen, out of Porsche, out of all the big car makers, really, the ones that went big into EVs are the ones that are now hurting, and everyone's now scrabbling to move into the middle ground space, which are the hybrids, right? And back into offering petrol and diesel again, in case, this is a longer term trend. Monkey Man saying Lulu. Yeah, what's happening?
Oh, yeah, Lulu got smoked. What a shocking set of numbers from Lulu. But we do have Tesla Germany off and running. So 265. Let's see how that comes through. 265 times 1 spot 148. Is that where the euro is? $304. $304. So a strong bounce in Tesla. All I've done there is taken the European price multiplied by the euro dollar. So, you know, we saw, I think, $268 it was at the lows yesterday. So that gives us a 10% bounce from the lows in Tesla.
Why
already.
would you want to
I think
short
the
that?
studio's gone quiet because Dom's gone to make a trade ahead of the all sessions.
Yeah, he does
loves
like
his
a bit of
Tesla. He says not anymore. Oil, let's have a look at that as well in the commodity space. Oil, let's have a look. I'm going to punch up WTI for you, down 0.5% there, slightly lower. But if you're looking at this from a weekly point of view, gains there on supply concerns. Yeah, so you're seeing it down 0.5%, but if the momentum continues, we could see this up around 2% for the week. We already talked about gold there, but copper. Let's have a look at copper. Still struggling for a bit of direction there. Let's have a look at copper for you. We're still seeing that, you know, sideways move that has got a slightly upward bias, but it is still stuck in that range there.
Right, so back to Lulu. We know that Monkey Man interested in his expensive yoga pants.
It is very expensive, isn't it, for what it's worth?
I just bought a pair of grey jogging bottoms because the quality is very good. That's one thing about
Wash as well.
paying up. But it's funny, I went into the shop, tried them on, all good, looked at the price tag, went up and asked if there was any discount. And the guy went, no, not really at the moment. Are you a student?
Yes.
I like you. So I put them down and I went and I walked around the shopping centre and I thought, I'm talking about like £8 difference or something, you know? So I went back and they were still laying there in the same place as I left them. So I did bought them in. But clearly not helping the numbers because the expectation going into numbers was 258 and it did come in at 260. So just topping earnings, but the guidance was ugly.
Yep, and also the fact that you know that T word kept on coming out. For those of you that read on what the expectation was, the T word was tariff-related costs. Tariffs, higher tariffs. You know, a lot of this is starting to really bed into the outlook story. Lululemon not being left out of that. Its shares fell some 22% post-market.
It's an interest because it was, so they adjusted guidance down to 1458 to 1478. That was only about a 40 cents cut, right? So a 40 cents cut is what, about 3%? So they cut numbers by, so let's say 4% at worst, and the stock drops 22.
Yep.
It's incredible. Let's have a look at how
being punished, and we've seen the punishment continue this morning. We've already seen Jefferies cutting their price target to $200 from 220, and also Cohen also cutting their target price to 321 from 373. But I do agree with you, it seems a bit harsh.
it's an easy one to dislike though, because they are so expensive.
They are very expensive, but Frank Caberna is a firm holder and fan. I say he talked about it so much when he was here.
He did.
He did, and he says that because they last so well, he's even asked Tasty if he can, you know, if there's any incentive that they can have a tie-up with Lululemon to get more of their gear.
Right, anything else you guys want us to look at before Joe comes and joins Angeline for the morning? Let's take a quick look at what else is happening in Europe.
Put in your questions here, and also slam the hit and the like button. There we go. You can see it right here between Rich and myself. You still have, there. You still we didn't plan this, the pointing, but look at the coordination there. But you still have time to get us to producer Phil, the figure we need today.
Yeah. Jokes aside, it would mean a lot to us if you could hit that and hit the like button as well. Yeah. So yeah, the thumbs up, not the love heart. You can give us love hearts if you like, but the thumbs up is really useful. Yeah, okay, so the read through from Lulu. If people aren't spending on expensive clothes, are they spending on Adidas trainers? So Adidas showing down 1.2%, Puma showing down 1.7%, and you see the rest of the European losers there as well. On the upside, we are Ubisoft buyer, SocGen, RWE, nothing really to speak about. Havas, perhaps a little bit of the Canal Plus effect there as well.
Yep. Certainly the cost of living crisis not affecting the McDonald coffers, because every time I look over, he's got new kicks on. Are those new?
The hawkers.
Ah.
No, these, I just don't normally wear these to work, but I thought I had to run to the station today. So.
Ah, okay. Right, so let's have a look at Adidas shares. What I want to add, though, for those of you trading Adidas shares, is from a technical viewpoint, we have seen quite a few red candles since the 27th of May. So to me...
Which is when we went short, Angeli.
Yeah, precisely. And, you know, this is a pattern that is one that technicians really like, because it's very consistent, you know, red candles every single day. And now with Lululemon's news as well, you know, this implies that this is going to continue sinking further. Other news out there, let's have a look across. We're still seeing, let's have a look at the bond markets, because we talked about this quite a bit yesterday with Aaron Bright. And at that point this morning, we were still seeing longer term, the longer end, creeping towards that 5% mark there. Here we are.
Just spotting as well, FTSE is on a tear here. FTSE up 28 points since 8 a.m.
Yeah. I have to do the click thing, guys, because sometimes the FN11's the other screen.
Come on, Ange.
Here we are.
4.88 on the 30-year.
Yeah, here we are.
4.88, down from that 5.01. What is it going to be at 1:35 p.m. today?
We'll find out. And we got Joachim coming up next, so we can talk to him and get his call on that as well. Producer Phil, you're writing down all the calls for the jobs number as well, aren't you?
Just a quick question there. Jugger's saying Monday is a holiday. What holiday is on Monday?
Huh.
No, we just had it, haven't we?
Yeah. Is there something happening in the US, Jugger? Or are you...
We'll find that out for you. But I thought we had holidays last week.
It's the Germans and the French.
Oh, it's a European bank holiday. No. Forget about it.
Yeah.
Important markets are open.
We are here. We are here, and we'll be ready to go on Monday. Right, on that note, let's bring in Joachim Clement from Libra. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding,
it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Hey, welcome back. And we have Joachim Clement from Liberum joining us here to talk all things infrastructure, trading, Germany, ECB, the bond madness as well that we've seen recently, and that you've now returned to after your holidays. Welcome back. How are you?
I am good. I'm good. Can't complain, especially after last night when we got the best movie of all time.
Oh, yes. High drama. I mean, I agree with Monkey Man. I kind of thought, you know, we'd reel out the popcorn a lot sooner than this. I feel like...
No, actually, I said it's like we all expected it to kind of like within 6 months, it's going to be a messy divorce, and yesterday was just too much
which is
fun.
why I meant I thought it'd be earlier because, you know...
It's 6 months. It's 6 months now, so we're just on time. It's okay.
Yeah, and, you know, do you think... I just would like your view because we've had, you know, lots and lots of different... comments here, some saying that, you know, it's the start of the end. Some of them, some comments I've had mailed through. Thank you, those of you that emailed me, the fact that this is yet another piece of the drama that has been agreed and they're just letting play out because, you know, whether it's good news or bad news, any headline news is still news for the Trump and Musk.
Well, I think for Donald Trump, it is definitely something that he enjoys. It's kind of his modus operandi. For Elon Musk, I'm a bit more doubtful. Turns out he actually needs those EV subsidies in the US. And if they are cut out of the budget bill, that is really a major problem for Tesla going forward. And so the reaction obviously was to call the president a pedophile, which clearly is a very elaborate investor relations strategy that the market so far doesn't quite understand. But we'll get round to it and we will finally understand what the bigger plan is behind that.
Or the lack of PR strategy.
Well, we know Elon Musk doesn't have a PR department, and he is the PR department, and for better or worse. So, yeah, it's going to be fun. It's going to be a fun ride.
It's going to be a fun ride indeed. What is your expectation of what's going to come out from the expected talks between the two later today? Apparently it's slated, a phone call has been reported, because maybe these two can't be trusted in a room together.
Well, it's definitely going to be a phone call. And I think given where we were yesterday, things can only get better. We see that already with Tesla opening higher this morning in Europe. But to be perfectly honest, I think it is a situation where the relationship is broken and where the fallout is going to be probably at the beginning worse for Elon Musk and his wealth. But in the long run, we have to remember that no matter whether Elon Musk loses 50 billion or 100 billion in wealth, he's still the richest man in the world. And his threat to open up and start a new party could be a real danger to Donald Trump and the Republicans.
Counting down to, of course, the all sessions there, and you saw Rich live on the show calculating the expected move back once all session starts. He did that simply by looking at the German shares and timesing it by the currency conversion. We're looking at the Tesla all sessions stock here on the platform. All sessions, of course, a great product here at IG because you can get ahead of the game, and that is going to open in just under 30 minutes time. Just showing that to you because to show you the action in this is the hourly chart action in the previous session. Let's shift gears here to another big country that really relies on EVs and especially autos as well, Germany.
Yep.
You know, you're very excited by the infrastructure play. Talk us through that.
Yeah, so I think, so everybody, when you talk about German manufacturing, you think about German cars. And to be perfectly honest, that's the last place I would invest these days. But actually where the big moves are going to happen, in my view, over the next couple of years is with German infrastructure. Earlier in the year, the Germans changed their constitution and built in a 500 billion euro infrastructure fund. So over the next 10 to 12 years, they're going to spend 12% of their GDP, 500 billion euro, on infrastructure. It was notable that at yesterday's ECB meeting, Christine Lagarde at the press conference said that, like, yes, we're at the moment at a weak spot for the European economy and for European inflation, but the pump has already been primed. So the acceleration will come, and she explicitly mentioned infrastructure and defense spending. Now, defense spending, everybody is already on that train. Yeah. The infrastructure spending train, I think, is still somewhat in the background. And that, I think, gives a lot of opportunities, in particular in companies that benefit from infrastructure spending in Germany.
So I have a watch list of infrastructure funds, but take us through some of the ones that you are interested in. I think you mentioned Geberit, is that one?
Geberit is making, obviously, toilets, bathroom appliances, and things like that. And Strabag is an Austrian infrastructure company that makes roads, bridges, and the usual stuff.
Right, right.
I think the interesting thing about the German infrastructure spending bit is that if you look at a traditional infrastructure fund, the stocks that are in there hardly have any exposure to Germany. They are typically French infrastructure companies like Vinci and Eiffage, and yes, they will benefit as well because Vinci makes some roads and will be asked to build some roads in Germany. And Eiffage is a darling of mine because it pours the concrete foundations of wind farms and windmills and has been doing really, really well recently. But where it gets really tricky is when you want to have really big exposure to Germany that drives the top line of the companies and of the profits. And you see here Eiffage has been mostly moving sideways recently. But it is something that I think is improving fast as the order books are filling up there. Now, when it comes to getting real exposure, you have to look a little bit outside the simple ETFs that are investing in infrastructure, because most of German construction is either not listed or very, very small.
Yes,
so they don't show up there.
Yeah, and what's interesting about that is every time I speak to someone who trades this space, it's very, very dispersed.
It's fragmented.
Yeah,
it's a highly fragmented market, yeah.
Which I find ironic because everyone I speak to about the build quality and the talent in construction there has said it's, you know, incredible. It's just, you know, out of this world. It makes everyone here look like cowboys.
Well, I'm German and I live in the UK, and there's this saying that what...
He sometimes complains about it to me.
Not just sometimes. I mean, there's this saying, what the British call renovating, the Germans would call painting.
Yes.
It really is a very, very different category and quality of infrastructure. in Germany than
Come
it
on,
is
let it
in-
all out now. Let it all
Yeah,
out.
no, it's just the second best in Europe after Switzerland, which is even better than the Germans. But the Swiss don't have an infrastructure package that they need to spend because their infrastructure is working. The Germans over the last 10, 20 years since the financial crisis have neglected their infrastructure, and now they need to invest a lot in order to replace a lot of ancient and aging infrastructure, whether it's roads or even the digital infrastructure and the fiber optics networks and things like that. And the fun thing is that construction tends to be extremely local. In Germany, more so than in other countries.
Yes, and if you're building a town, for example, you get all the builders from that village and from surrounding villages.
Yeah, no, it's a miracle how the city council and the local councils are all filled with the local builder. Because if there is an infrastructure project that is coming down the road, the local builder wants to have the inside scoop on how to kind of bid for that in order to kind of get the local contract. So it is very fragmented. It is somehow very strange. But when you go to the national level and move up from the local level, and into the national level, when it goes about autobahns, about bridges, about airports, etc., that's when some of the bigger names come into play. And traditionally, most hedge funds and that I know have played it with Hochtief, which is Germany's largest infrastructure company.
Yes, I have Hochtief.
You have Hochtief. That's good. Hot is the ticker. I love that ticker. But the problem with Hochtief effectively is, as you can see here, it rallied a lot in January, February when Germany passed its infrastructure bill, and then crashed a lot in April and May. And why is that? Because 40% of their revenues come from the US. So now you have a company where half the business is brilliant, that's the German side, and half the business is really in a bad shape, and that's the American side. So I really struggle getting getting to like Hochtief, because the US bit is just too much anxiety and too much uncertainty for me there. Where things get really much more interesting is Strabag. Austrian company. You won't find it in any index because it's 90% owned by the family and places like that. But it makes pretty much all of its revenues in Germany and in Austria building roads and building traditional infrastructure. And that, to me, is the #1 stock to use if we want to get German infrastructure exposure.
So essentially, Strabag is like Autostrada, is that right? Is it similar?
Technically speaking, yes. I know what you're aiming for, because Italian roads and bridges aren't the best in the world.
Yes, I still recall that, Autostrada bridge crisis. It's still gives a shiver down my spine, because I have driven across that bridge. I've gone to Genoa many times.
Yeah.
But then you said, well, that's pretty good. Like, last
Come on,
10
they haven't had a bridge fall down in 10 years, so that's quite all right.
My goodness.
I mean, that for Italian construction companies, that's quite a success.
Right. Hopefully Strabag is better. Its share is certainly in an upward trend there. This is the daily chart, trader friends. And, from January, we saw that, hiccup in April, but, many stocks, let's be honest, had that hiccup in April. It's now back up on that upward trend there. What's with that strong volume spike on Tuesday?
That was the result.
I see. So just looking this up, because this is not one I am familiar with.
Hardly anybody is, by the way. It's one of the most undiscovered stocks anywhere, because it is not in the Stocks Europe or the MSCI Europe indices. People don't look at it because only 10% of the stocks are in free float. Or 15% to be precise.
Nice.
But it is, as you can see from the chart, it is in a very, very strong uptrend. It has all the fundamentals on its side, not just now, but actually for the next 1 to 3 years.
Nice. And you were saying that this one is special in that a lot of it is family owned. Is that right?
It's owned by the family and by the local region in Austria. So it's 3 major stakeholders with each about 30% of the shares. And yeah, it is effectively controlled by the family that owned it from the start.
Right, R. Sachs, if you're on the show like you are every day, just calling out a really cool thing that R. Sachs also notices when we talk about stocks like these that in particular are family owned, or a family has a particularly large stake, it's always good to understand who's selling, who's buying, what that action is in the background, because that will matter probably more than or as much as what the market is doing at that point. Jagger, who I believe is also German. We've got a lot of German viewers and traders here. Jesse14 is also from Germany. And Jesse, I've sent a bag out to you, so you should be getting it soon, depending on how fast Royal Mail is. Jagger saying, but if you count internet and telecommunication as infrastructure, then there is some lack of that in the East, because the East tends to be more rural.
Yes, absolutely. And this is why I, in general, like some of the big cable manufacturers in Europe, NKT, Nexans, all these guys. The problem with them is, well, actually, there's not a lot of problems with them. They have a very pessimistic outlook by analysts at the moment. So it's very easy to beat expectations. And they have sold off quite a lot in April because they rely a lot on Chinese components, and the tariffs might actually drive their costs quite a bit higher.
Right.
But a lot of those cable companies are now bouncing back strongly. So I would say on a 3-month horizon, they are a really interesting place to look at.
Let's talk about Siemens.
Yep.
Yeah, because I know this one's close to your heart. Siemens has had quite an interesting time recently. Just adding that to the workspace to show you. Like many others, it had that
massive drawdown.
puke out, yeah,
Yeah.
around March and to early April. And then we saw it climb again before consolidating from around mid-May. Level. It's now doing that slight trickle lower.
Yeah.
From what I can see as well, Siemens should benefit. They should benefit from Germany, saying we're going to spend, and loosen our coffers.
Yeah.
But when are we going to see this, really lift the share price again? Because right now it's just it's going the wrong way.
Yeah, so at the moment, it is consolidating, and we've had German industrial production numbers this morning, which were quite a bit weaker than expected. So there is still some weakness in German manufacturing. I would say there are several things to note. First of all, Siemens owns about 20% of Siemens Energy, the wind farm maker, which has been rocketing for years now, 2 years now, basically. That is going through the roof, and that is one of the key beneficiaries. What makes Siemens interesting is the mobility division, which has extremely high margins. Basically, the mobility division, for those who don't know, they are very much engaged in making trains, train carriages, locomotives, stuff like that. And that obviously is going to be a focus for German infrastructure spending, because as I saw in the comments, Stuttgart Hauptbahnhof is one of those major money pits all over Germany. And yes, Strabag was involved in that. Siemens will build the trains that go into the German train railway system, which is in a desperate state. 20 years of underinvestments. German train system is by now as bad as the English one. And
He's got to get
hey, England, the UK is the only country in the world where every train station has a fixed stop for replacement buses. Okay, that doesn't exist anywhere in the world, which tells you something about British trains. Anyway, So Siemens, the mobility division is really, really key. And there are persistent rumors that they might spin it out at a 16 billion euro valuation at some point this year or next year
They
in
keep
order
talking
to
about
unlock
this.
value.
They keep talking about this, Joachim. The problem is I've never seen a firm date. They keep talking about the spinning off of that division.
But the interesting thing about Siemens is Siemens has a track record of spinning out its subsidiaries.
This is
Siemens
true.
Healthineers, Siemens Energy.
What a terrible name, Healthineers. I mean, whoever thought that up?
Some
You are
PR
right.
agency.
They do have a strong track record. One thing that I would say concerns me, I like the mobility space, but they are extremely, extremely reliant on the US for that market as well.
Yes.
So my concern there is, with what's happening in the US right now, that they're not going to get those contracts come through for Siemens. So to me, this means potentially more downward pressure just because they're so reliant on the US market in that space.
I would disagree because our leading indicators, which work particularly well for Siemens and the mobility space, show that order books are filling up. And that the new orders are coming in, not so much in the US, where things are indeed deteriorating, but interestingly in China and in Asia. Export orders are coming from that area, and Siemens in general, as well as the mobility division, are actually also benefiting from that uptake in China and in Asia in general. So I would say that the uptick in Asia balances out the weakness in the US, and what you're left with is the exposure to Germany and Germany's infrastructure.
Right. Producer Phil, how much time have we got? Oh, can I just squeeze in a pair trade? Go on then, they say. So a pair trade, I'd love to know what you guys think, trader friends, because a cool pair trade, if you wanted to do Siemens and you agree with Joachim that, the mobility side is going to lift this and the Asian side will offset the weakness in the US for mobility, then you want to go long Siemens, but then ThyssenKrupp is one that's looking like it is in pain. So this is what I mean, Producer Phil. When I do F9, F11, it hides my search button. ThyssenKrupp here, putting that back in. And look, ThyssenKrupp is marching lower. ThyssenKrupp recently came out with numbers, 90%, far worse than expected in terms of its earnings and uncertainty and economic cost cutting is some of the things that it has said is behind the earnings outlook. Right, that's all the time we have left, but we're going to have Rich coming in with Joachim, so stay right there, grab your coffee, and we're going to have a macro roundup with these two.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
And welcome back. So we're going to dive into some macro chat. Joe, first time that we've been on air together.
Yep.
I'm very excited.
Same here.
So let's go US, right? Because we know that that's what drives the world.
Yeah.
Now, we have seen a move recently out of US into Europe, but do you think that's the start? Do you think that's just the top of the iceberg?
I very much think so. I compare it to the post-2000 situation. There are a lot of international investors, and in May, I've been 3 weeks in Asia talking to big sovereign wealth funds and global pension funds and stuff like that. And they all were suddenly looking into diversifying into Europe mostly. Asia as well, a little bit, as long as it's not China, but basically taking some chips off the table when it comes to the US, where their portfolios, because of the strong performance in the US, have become increasingly concentrated. And now they wanted to kind of reduce the US exposure a little bit and moved it to Europe mostly. And I think that's going to take 2 years, 3 years.
It does, and even by nature of S&P going up 26, up 25% 2 years running, and the stronger dollar, they might not have even had any changes, and it's just become a much bigger part of their portfolio.
If you have as a benchmark the MSCI World Index, the US market share in the MSCI World has gone from 60% 10 years ago to 73% in March.
Wow.
So if we only just take it down to 70 or 65, that will do two things. First of all, it will boost from the inflows European stocks and Asian stocks, as I said. And then the second thing is it will continue to weaken the dollar. We know from in 2000 when US share in the MSCI World went from 55 to 60% in 5 years, something like that, and then went back down to 55. That took about 2.5 years and devalued the dollar by about 8 to 10%.
Wow.
So if you are taking it down now again by 5% in the share, just the reallocation of money drags the dollar down by another 5 to 10%.
Right. And how the relative valuations between something like Germany, that we've already seen a big move, and the S&P, how are the relative valuations?
So at the moment, if you adjust it for sector composition, because the US obviously is more expensive because it's so loaded with tech companies. And even though a lot of those big tech names have degraded quite a bit and are now cheaper than they used to be, there still is, on a sector adjusted basis, about a 30-35% discount of European stocks versus the US. Yes.
Even, and is that just Europe, or does that include UK?
That includes the UK. The UK is a little bit more. If I would take the UK out, it's probably somewhere in the 27-28% discount. But we're talking about a serious discount that is larger than most of the time we had over the last 10-15 years.
Yeah, and that's before you start to put in the German debt brake coming off. And the tailwinds that will give.
I mean, the reason why that discount existed was because Germany lacks productivity, or not just Germany, Europe lacks productivity, lacks growth. If you wanted to have growth, you had to go to the US. Now, what has changed since then is not that suddenly Europe has become much more productive and the bureaucracy has kind of disappeared. No, we're still good at that. It's like the number one export of the European Union is regulation. And we're still doing that. But the thing is, with the defense spending and then the German infrastructure spending, we're throwing so much money at the economy that it overwhelms, at least for the next 5 years or so, it overwhelms that regulatory drag.
Yeah. Well, let's take a quick look at the expectations for S&P forward earnings. So we've got the nominal versus the real there, but then the actual underlying figure, we've got, now where are we? There we go, 275. So that is, the red line is the expectation for 25. And then we've got those leading economic indicators there in the dotted line. Why aren't we seeing more concern around the market and what's priced in relative to those leading economic indicators?
Well, your guess is as good as mine, because there's an awful lot of over-optimism, especially when it comes to the US stock market right now. Our leading indicators show a similar picture. Earnings in the US should start to fall in the second half of this year and then into 2026.
To what magnitude, though?
Well, we have over the next 12 months some 5% earnings growth in the S&P 500 versus the 10% that analysts' consensus is at the moment. Roughly.
Okay.
So it's not super bearish. It's not a situation where we are forecasting a massive earnings recession.
Yeah.
But it's definitely some downgrades coming, and that should put a lid on share prices.
And what about in 26, though? Because that 300 number that gets banded around, that is why the S&P keeps gravitating towards the 6,000 level.
Yeah, and that has to come down, quite frankly, because I think if there is a recession risk in the US, it is not in 2025, it is in 2026.
Yeah.
Because what we get in the second half of this year is we get this one big beautiful bill act, hopefully passed, and those tax...
Hopefully.
Well, it depends on your view, but what it does is it will keep the mood up. Because an extension of tax cuts should boost the economy, even though it is effectively creating 2.4 trillion in extra deficits over the next 10 years, which means that treasury yields will have to go up and will eventually start to bite when it comes to stock market valuations.
And that was my next question. What are the repercussions of that when we're already seeing Jamie Dimon come out and warn that the bond market will have a wobble, as he so politely puts it? What
he has to put it like that.
And it was amazing that he was even so kind of vociferous on that. But what does that 30-year do if we start to see the debt number move through 37 trillion, the deficit expectations blow out?
Yeah. So we now have increasing evidence that investors are asking for a risk premium on treasuries. And that risk premium has been growing basically since the pandemic. It's been increased by about, estimates vary, our estimate is about 1 percentage point. So basically in the pre-pandemic world, the 30-year treasury would be at 3.8 now instead of 4.8.
Yeah.
The estimate from the uncertainty around fiscal policy and trade that we have now is that it should move treasury yields up by another 30 to 60 basis points from here. So we're talking 5.2 to 5.4 for the 30-year treasury.
Wow.
That is quite a meaningful move. And what it does is not only will it become a major wobble in treasury markets, but it will also mean that costs for financing projects, etc., will go up.
Yeah.
And that is then reflected in big infrastructure projects like data centers. Microsoft has already cut back on its investments on data centers because of a lack of demand. Well, guess what? If we have to pay an awful lot more to build those things and to invest in AI, that is going to curb demand there as well.
Can AI make up for that, though, chicken and egg situation? If you build the data centers, does AI boost the productivity enough to keep costs lower and profits high?
That's what we're all trying to find out. And there are two camps at the moment. There's, on the one hand, there is the AI bullish camp, which says that it is a revolutionary technology. And I completely agree that we've got some experiments where in tech, in software programming and things like that, it increases productivity by 30% or more. What that also means is that a lot of programmers are going to lose their jobs.
Not just programmers.
Yeah, all kinds of people are going to lose their jobs. So that's a problem there, because it means that there's a lack of demand in other sectors. And then there's the more bearish camp, which is Darren Acemoglu, who won the Nobel Prize last year for economics. And he says that over the next 10 years, the cumulative productivity gain is 1%. So that's 0.1% per year over the next decade.
That's dreadful.
And the reason is that he basically says, look, AI creates a lot of productivity gains, but in very small niches. You know, if you are a bricklayer, you don't have to be afraid of AI because ChatGPT is not going to build a house for you.
Right. So the real economy.
The real economy is not affected by it.
But the real economy is not represented in the weightings of the S&P 500.
Correct. And the S&P 500 is obviously geared much more towards technology and services in general than the real economy. So that gives the S&P 500 a little bit more leeway. The question is, will the drag in other sectors become a problem for the tech sector as well? And will the financing costs that are going up as treasury yields are moving higher, will that become a problem for the order book of NVIDIA and Microsoft and the like?
So the move in treasuries would strangle the Russell 2000.
Yes.
Would it kill the Dow as well?
Oh, that's a good question, because I'm honestly not looking at the Dow that much anymore.
Yeah.
It's an obsolete index in my view.
No, I completely agree.
It will definitely, because the Dow tends to be much more in real economic stuff. So in industrials, in utilities, in kind of real stuff. And because that's where the weakness is, I would say it will strangle the Dow as well.
So a lot of job layoffs.
Yeah.
Unemployment, does it move towards 5%?
No, it's not that much. Because what we've learned over the last 5 years, in particular with the inflation bout and the fact that as interest rates moved higher and the Fed hiked dramatically, unemployment rates didn't go higher that much. And I think that is because we live in a world where instead of opting for unemployment benefits and registering as unemployed, especially now with the tax bill and the budget bill, which is reducing a lot of the benefits anyway. So what's the point of registering as unemployed? You instead start your own business, you start a gig somewhere, and so you never show up in the statistics, in my view. And the end result is that we do see a little bit of higher unemployment rates, but by far not something that is particularly.
So then Jerome Powell doesn't have the reason to cut. So is the next move an increase?
I'm not quite there yet, but I am very much. I'm definitely in the more hawkish camp than what the market expects.
Okay.
We've been, and I've been in more hawkish, both in the UK, Europe, and in the US on interest rates than markets expect since the start of this year, because I think that the inflation bout that is coming now, and in the US it's driven by tariffs. And even if we get deals and we stick with the 10% tariffs that we're having at the moment until the 8th of July, and God knows what's going to happen in late June, early July.
Or this afternoon.
Or this afternoon, for that matter, for this afternoon, but even if we stick at that, we get a 1 percentage point inflation boost to the US inflation number by the end of this year in our estimates.
Okay.
So the Fed is dealing with a weakening economy and higher inflation. And the question is, what do we focus on?
Yeah.
And my conviction has always been that the Fed will focus on the inflation bit first.
Right.
And the reason is that we just came out of an inflation bout where the Fed has lost a lot of credibility as an inflation fighter. And where they have to worry about inflation expectations becoming permanently unanchored and people changing their behavior.
And a second bout of inflation would do just that.
Exactly. You see it already. If you look at University of Michigan consumer sentiment, that chart has been bandied around everywhere, where you look at the inflation expectations over the next 1 year and 5 years. And the next 5 years, the independents, because there's a massive switch between, or massive difference between Democrats and Republicans. Democrats expect like 8% inflation. Republicans expect like 0 inflation.
Yeah.
But if you look at independents, they expect 4.5% inflation on average over the next 5 years. And that is a major problem. That is way too high for comfort for the Fed.
It just doesn't quite tie into an AI productivity gain world, because that is your cost coming down.
Yes.
If we're going to get that kind of inflation, it's from companies increasing their profit margins.
No, it literally comes from companies paying more to import goods from everywhere around the world. And then the question is, do we have enough translation into services costs? because that's really where the inflation then becomes sticky. If services companies have to increase their prices. And I do think that if you look at it, a lot of the services that we use at the moment are tech related, which means that they are also related to the costs of spending on chips, on AI, etc. And companies will have to pass these costs on to the end customer. And that means services inflation will move higher, and that makes it sticky.
Did the ISM services number this week, was that a canary in the coal mine?
Yes, I think so. I think actually if you look at the prices paid within the ISM services, that's been moving higher basically since October last year. And that was the reason why I am much more hawkish since January, February, simply because it's like the pipeline of inflation pressures is coming through already before the tariffs have been enacted.
Yeah. Fantastic. Joe, thank you so much. That's a real download ahead of non-farm payrolls. We just have to ask you, what's your prediction for the payroll number expectation?
Worse than expected. I don't give you an exact number, but the ADP number on Wednesday was a real wake-up call. Yeah. That was 120,000 jobs expected, 47,000 jobs created, so about a third of what was expected. And, you know, that is not a perfect leading indicator, but I'm pretty confident that if you get 1/3 of the jobs created on Wednesday, you're not going to get anywhere near the numbers expected on Friday.
And market will throw its toys out of the pram like that.
Absolutely.
Good. Right, all to play for this afternoon. Thank you so much for coming in.
Thanks, Rich.
Join me in 2 minutes with Elliot Harris to bring you the All Sessions Open. Where's Tesla going to trade?
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and Here we are, straight in for the long-awaited All Sessions Open. Elliot Harris, what did you make of last night? How much fun was that?
Good morning. That was some fireworks, eh? What you can see, it's open. Oh, that's quite a bounce, nearly 5%. That is some move.
Yeah, we are 298, so right on that 300 level. It's all right. All is forgiven. They're going to have a nice little phone call this afternoon, aren't they, Elliot? And that's going to be it.
Go for lunch. The best pals again.
What would you give to be a fly on the wall, or I don't know what the equivalent on a phone call is?
It's just two kids in the playground. Oh, I don't like you. I don't like you, and yeah. All is forgiven by the afternoon. It's just crazy stuff.
It was only this morning that I thought, was this a genius ploy by Musk? Because he destroyed his reputation being Trump's puppet, or perhaps Trump was his puppet, I'm not sure. He lost a lot of his faithful Democrats, his liberals. Was this a ploy to get those back on side? Or did he launch his political career for 3.5 years' time?
I wouldn't be shocked to see the latter. I really wouldn't. Yeah, maybe we just need to wait and see some hefty volume going through on the Tesla 6-month calls. Yeah.
Yeah. Oof. Well, that would be interesting. Right. So 296 traded. Nvidia just holding its head above water. It's the only game in town, really, is Tesla. And on the downside, of course, Broadcom down 3.5% on those lackluster numbers. And Nike getting hit on the back of Lululemon. I'm not sure. Is that a Lululemon top you got on there, Elliot?
No, this is a polo top.
Nice.
Yep.
Representing. I'm not sure Lulu has a read through to Nike.
Slightly different target audience, I would argue.
Yeah, and a bit either or as well. But yeah, we're certainly seeing that repercussion there. And Nike had a good day yesterday, so understandable. Right, let's get on to non-farms then. Forget these all sessions. What is your guess for this afternoon, Elliot?
Biggest one in a while, I would say. Expectation, I think market consensus is about 120, 125. Estimates are ranging from 75 up to 190. So there's a fair bit of vol around there. Both would come as a major shock. I know your previous guest just before, he saw it coming in slightly weaker. I may be slightly on the other side of the fence. I think it might come in slightly higher, maybe 130, 135.
That's the only reason that I think that you could be right there, is that the non-farm has been so stubborn to come down that we haven't seen any indication of a really weak number yet at all, have we?
Not yet, no. Obviously, the ADP was very weak on Wednesday, so that's a concern. But yeah, the overall headline figure, it's been pretty resilient. For me, firms, there's so much uncertainty still out there. I think firms maybe aren't letting people go quite as much as what some people think they might be. Yeah.
I mean, I guess the ADP gave us a bit of a clue, but the jolts didn't give any indication that they're stopping hiring.
No, exactly. So it's a real trade-off there. Yes, it's been quite a mixed week for data. The unemployment rate also very key as well. 4.2% expected. Wouldn't be shocked to see 4.3 maybe.
I think we're on the same bus on both guesses there, Elliot. And
you can be right sometimes. And obviously that all leads into the Fed. What, July cut now, 67% chance of no cut. That's increasing every day. September's now priced in loosely a 50-50, I believe. So we'll see a shift in that, I think, after 1:30 today.
Well, yeah, we'll see a shift in that, right enough. But the June Fed, how you do the projections, there's just so much left to play for. Whether the big bill goes through, whether you start to see the slowdown bite, what the tariffs are. It's almost impossible to do the SERP, isn't it?
Yeah, for June will definitely come a bit too soon. Today's number, are we going to see any tariff effects? Maybe the first signs of any filtration into it. I still think it's maybe slightly too soon, but we're getting to kind of the nitty gritty when they're going to have to do something. Yeah, so they can't sit on their hands for too much longer.
Talking about nitty gritty, what was your favourite tweet of the night last night?
I wasn't actually following. I had a catch up with some old IG colleagues that I've not seen for about 10 years' time. So
nice.
It was a great evening.
Thanks for the
invite.
Lots
of old stories.
So I think the favourite one was definitely, well, calling for the impeachment was pretty out there.
That's pretty strong. I also saw the one about Epstein. Yeah, that was a bit strong as well.
Yeah, and that's what I mean by how intentional was this from Elon? Because you don't throw a tweet like that out, which was suggestive, and there's absolutely no evidence that that's the case. There's there's no suggestion that even if he was in the files, that there's any guilt there, right? So that was a really intentional tweet from Musk that either, as Trump says, he's gone crazy, or he's doing it to launch his political career, or to bring Trump out and have a really forceful, open argument.
It was certainly a hefty grenade thrown. I think we can say that for sure.
Right. So yeah, How does it feel to lose 36 billion in a day, do you think?
I read it was 150. I thought it was 150 billion that got wiped out of all. But
Musk personally.
He's cut. Yeah, exactly.
36 billion, which is what he paid for Twitter, I think, wasn't it? That was near on.
Wow. Probably kind of me to dropping a tenner out of my wallet, I would think. And yeah, some sort of annoyance.
Now, going ECB, we saw yesterday. Yeah, much of a muchness. These currencies have been strong, haven't they?
Yeah, FX vol, I was just looking at earlier. 1 month vol's down around about 0.75%. FX vol is interesting because it's where IV has fallen the most relative to RV. So realised vol on euro dollar has been pretty punchy in the last month or so. For most majors, IV is a discount to RV, which we've not seen for a little while. You certainly don't see that in index options. Index options, you will always have IV that trades over RV. Mm-hmm. Explicitly also, sorry, just bear with me 1 second. Sorry, just don't come through. If you compare that to oil vol is 1 month IV is trading roughly 12 points over RV.
Really?
So implied vol is extremely rich in oil. So in terms of all the asset classes out there, that would be richest.
Okay, let's have a look at that. Have you got any feeling on oil at the moment? It's certainly bounced off that 60 level, hasn't it?
It has definitely bounced off that 60 level, yeah. Seen some decent selling of premiums, actually. So that kind of correlates to exactly what I just said.
Yeah.
The premiums are looking richer than they have done, and we've kind of been stuck in a little bit of a range the last week or two. Yeah, so for me, I don't think we're really going to break out. I don't see us testing that 60 again for a little while.
Oh, that's interesting. It has really struggled to hold a bid. So above 65 would be a bit of a surprise to me.
Yep. Yeah. I think we're going to stay between this $60 and 65 for certainly the next couple of weeks. That's what I would expect.
Yeah. But then, other commodity world, what about silver yesterday?
Silver, what a blockbuster that was. Wow.
Hi-yo, silver.
The keen watchers might remember 2-3 weeks ago I came on saying I did a little piece with Ange about how silver is often slow to track any gold move. So gold had actually posted new highs. Silver hadn't reacted yet. It sure caught up this week. Up 4% yesterday, up 8.5% on the week. It's hit a 13-year high.
Is it really?
Very, very strong.
Wow.
Seen a little bit of a shift in the skew in the term structure, mainly on the top side. So now they're beginning to price out a breakout. For me, if we hold above $35 an ounce, I really can see us testing $40 possibly by the end of the summer.
Wow. And yeah, you guys have smashed that. Both you and Matt Arbour we've seen a 10% rise since you highlighted that. So spot on, gents.
We can be right sometimes.
It's almost like the two of you have been doing this for 50 years.
Well, actually combined at IG, he's 50 years. I'm 21, nearly 22, and he's probably 27, 28, yeah.
When do you get your watch?
A lot of experience there. Huh?
When do you get your fancy watch?
Sadly not, no. No such thing.
Good stuff. Right, Elliot, wonderful as always to chat, but what about down to the important stuff? What is the trade of the day on the S&P options world for non-farm Friday? Let's have a look at where the dailies are pricing.
Let's have a look.
Whoa.
Yeah, Vol's been crushed a lot this week. S&P Vol's probably down 2 or 3%, I would say. Obviously today, this is the biggest non-farms we've had in a little while, I would say, certainly for the last 3 to 6 months. Implied vol around 28%. That's maybe 3 or 4% higher than we have seen for the last couple of non-farms.
And just take the people through exactly what that vol means for those that aren't au fait with options.
Yep.
And then how you get the expected move of the day.
Expected move of the day, that's the calc we did about 6 months ago, didn't we? Where you take out, you do a calc over, you can either do over 365 or over 250, depending if you want trading days or calendar days. But loosely, if you add up the straddle, so you take the call and the put, so let's say you take the 59.60,
okay.
Loosely 24 on the call, 23 on the put, gives you 47. 47 divided by where S&P is 59.60. So you're implying roughly a 0.8% move today.
Okay.
Which is, yeah, it has been higher, certainly the back end of last year. That was probably guessing on maybe slightly over 1%. A CPI day, certainly back in the day, maybe 12 months ago, you were probably pricing in 1.5%.
I'd almost.
Yeah, so I would say the last couple of non-farms, the move's been roughly between 0.5% and 0.75%, and today we're up at 0.8.
Yeah, I think. Do you know? I'd almost be happy to buy that straddle, but then sell some wings against it.
Still pay for it, yeah.
To cheapen it down a bit.
I can see that being a good trade. The downside skew in particular looks aggressive to me, so
okay, you
might want to do maybe a 2x1 perhaps, or even more than that perhaps. What you're looking, maybe 58.75, 58.80 on the put side?
Yeah, so
that's an 80-point S&P move. You're receiving almost 4.5 ticks.
Yeah, this is quite interesting trade actually. So we would pay 24 plus 25, so 49 ticks. And then we could sell 2 of these wings to receive 8. Yep. So that takes us down to 41.
Yep.
And then probably just sell 1 of the upside because I'm in trouble if it's going a lot higher.
Exactly, yeah.
So maybe 1 of the 60/20s. That takes us down to 38 points. Is there something there? 38 points for the straddle on non-farms. That seems legit.
Yeah, and certainly if we do get a number that comes in closer to those low and high estimates, I think we are going to get a decent shift. So as a vol buy and trade, I don't think that's bad value.
Yeah. Good. Elliot, thank you as always. Absolutely wonderful. We are coming up to Angeline and producer Phil are going to have a quick Q&A. So anybody who has any questions, whether it's on the platform or on Angeline's holidays, then please pop your questions into the chat. Elliot, big weekend plans?
A bit of a quiet one this weekend. It's my oldest son's 13th birthday, so I've got
go
a
on, give him a shout out.
On the way. Jacob, yeah. He's a little monkey, but hey ho. In fact, tonight we have a lads v dads match, so I might come in nursing an injury where a bunch of 12-year-olds have kicked lumps out of me.
Lads v dads when they're 12-year-old. That's an interesting one.
It will be, yeah.
I fancy you'll get 5 goals past them in the first 20 minutes, and then you're in trouble.
Cut them in pieces, exactly. Yep.
Yeah. Good stuff.
It'll be good fun.
Right. Also, that's me for the week, people. So have a wonderful weekend, but more importantly, have a wonderful trading session on the S&P 500. We will try and get a video out. We're going to do a couple of videos on the Trump-Elon spat as well. So make sure you subscribe to our YouTube channel to pick those up later on.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Hey, welcome back. And we have a special segment with our one and only producer, Phil. Hello. Good to get you away from the gallery and into the studio.
I know. I know what I prefer, but I thought I'd come have a chit chat. I've also missed you guys as well. I've been busy.
You have. You've been moonlighting.
I've been moonlighting. I don't mean to moonlight, but I'm a man of my word. So when I agree to something, I don't like saying no to it. So, but I am tired. I was pulling cables out at 9 o'clock last night. So yeah.
Say I missed you in my ear.
Yes.
Just,
and now we've got Rich in our ear. So I'm not sure what's better or worse.
He was also trying to be director Rich as well earlier.
He was, yeah. I've had to ban him from touching cables.
Rich, give us a few highlights from the conference.
I mean, they talked a lot about AI, classically. There was also a lot of fintech stuff. So my day job is fintech, and then my side job was fintech. So I was exhausted by fintech at the end of it.
Yeah.
But yeah, South by Southwest, it's an Austin, Texas festival that's coming in for the first time in Europe. So it was the inaugural one. It was a massive thing in Shoreditch. They had like 30 venues. It was bigger than I thought it was going to be. So I was just doing the cameras and the vision. I don't get to press buttons anymore. This is the problem with this job.
He likes pressing people's buttons.
I like pressing buttons. I'm an engineer by trade, so now it's a different side of things. But I enjoy it. You know, we're good. I'm glad to be back.
How many hours was it? A very long one, like. You know,
yeah, like
late?
10, 12 hours sessions. Everyone just wants to talk about AI. And a lot of governance stuff as well, talking about kind of how to basically integrate these things into policies and governance and, you know, utilize them. However, there was some scary chats about AI replacing things rather than actually AI assisting us in our day-to-day life.
No.
So, and that was a good. It was a good event. You know, I enjoyed it. But I'm tired. I'm glad to be back.
I'm glad it's Friday too. But we have loads to get across, loads of questions from our trader friends, and we love it when you. It makes our job easier when you give us questions because then we can be targeted.
I've got a few things I want to talk about now.
Yeah.
If you do have any questions about the show, about Angeline's holidays, about Richard's deodorant usage or his credit card limit for the event that we're going to go to, then get them in and we'll answer them. But there's a few things I wanted to discuss. Is Phil a Take That fan? I've actually got a really funny story about that.
Okay, I've got a funny story.
I've performed on stage with Take That.
Really?
That's not even a joke.
Wow.
Yeah. So I did 9 nights at the O2 Arena with them. I was a backing dancer. That's literally not a joke.
I love it.
People won't believe me, but
I want pictures on this, people.
I'll find some photos. Basically, I went to Ravensbourne University, which is right next to the O2 Arena, and they put out basically like, we need backing dancers. And I thought it was a rigging job. I thought it was experience. I thought I was doing that. And
you thought you were rigging in the background, not dancing.
Yeah, I thought I was. It was work experience.
Nice.
Turns out it was backing dancing.
Nice.
9 nights there, in front of 20,000 people.
Dare I ask, what were you wearing?
White shirt.
Okay.
Yeah. So that's
very Take That.
Very Take That. So I actually am a Take That fan because I've technically seen them the most live, which is embarrassing. Anyways, back to a few things I want to discuss. Discord. Look.
People, producer Phil has been, I said like Tough Mudder. He has been going through the Tough Mudder ever since.
I've done Tough Mudder twice.
Oh my goodness, Take That and Tough Mudder. I know it was you, Maturin, because we were on the show together and it was Maturin who came up with the idea and everyone chimed in as well. And I think Maturin, you also came up with emails. I remember, I've got a good memory that you even said, you know, here's how you set it up. But Phil has been trying to get through hoops.
Yeah, I've got a deal.
Hoops. You've got a deal.
Well, the deal to the people.
Oh, to
I've made my last plea, email, message to the powers that be. If it doesn't happen for whatever reason, then you have our blessing. I'm not going to take it personally. I'll sleep easy at night and we'll just join you and help you out. And it'll be community-led, and that's fine. So that's the Discord. It's just kind of been a bit of a painful experience, but you know, we are at powers that be. You know, like you've got to work with people. Yeah. So we're trying our best, but of course, like, you know, we will give you our blessing. I want to talk about something exciting that was approved recently. That we're going to get some improvements to the show.
Yay!
We've got some budget.
Amazing.
And we're gonna try and improve things. So you will start to see different looks and feels of the show. That will mean that we'll probably go to some kind of like temporary studio for a little bit. We don't have a timeline on that realistically, but it does mean that you'll have a different show. It'll be a shorter show, and it might be a little bit less of our normal guests. But we'll keep you on air. We'll keep the moves coming.
Will Ange and Rich, who've got terrible eyesight, get bigger screens?
Potentially. I know the studio. It's you might need to work on your eyesight.
Okay.
So just drink loads of carrot juice from now between potentially happening in end of June, July. That's an arbitrary date at the moment. We're working on it.
Because just telling everyone, trader friends, how much we make these shows happen. Like I ran out of one side of my contact lenses, so I've got 2 sides of the lower power on at the moment.
Yeah.
So thankfully I've got 2 screens here, but like that screen over there is now starting to get blurry. But it would be great
What's
if,
wrong with you guys at IG and your eyesight?
because we look at so many charts. That's why we ask her, how many, this is a poll,
I worked
all
at
of
Meta,
you,
and I
how
read
many
it.
of you have got perfect eyesight doing what you do? Just
I
give
don't
us.
think our demographic has perfect eyesight.
Oh, Andrew McKilvey, what a compliment, saying, Phil, the show is perfect.
Music.
Just the music that needs
Yes.
improving.
Music's a funny one because music's a copyright issue and music's a branding thing. So we're still working together with the branding team when it comes to basic music. So the music will probably change as well. I don't know when, but the music will change and we'll, you know, I'm a classic rock fan. I love Dire Straits. So the intro music, I feel was a little bit Dire Straitsy. So that was what I was going for. So the music will change, but it's more like working with what we've got. I also adopted the show from producer Fred.
Yes.
So I'm just kind of working with what I've got and also integrating more into the IG team.
And like Phil said, we also have to work with the licenses. We can't use just any music because then we'll have
If
to.
we could just use Dire Straits, we would. It would just be Dire Straits or Rush. It'd be one of the two.
Yeah, something upbeat, right?
I'm not beat.
Will we get air conditioning? Can I show them this? Can I show them this?
What's that? The fan, the John Lewis fan.
Yes, so to prevent Ange and Rich from overheating because we're surrounded by lights, we have this thing going on. So
It's actually quite nice though with the
so
breeze.
that-
on this. I can see why Rich struggled.
yeah, now that you're in with us, you know it's like a sauna.
The fan's nice, I must admit, although he's left his bloody banana here again. I'll keep...
Oh yeah.
Banned McDonald, banned.
Producer Fred banned bananas from the, and after he left, then Rich and I thought we can bring the bananas back in.
But now I'm back and...
No, I mean, Fred, not you. You don't have a problem with the smell.
No, I like bananas.
Yeah, I like bananas
my
too.
mum hates bananas. Doesn't like the smell.
What is this
Not allergic.
anti-banana stuff? I mean, what did a banana ever do to
I'm a big banana fan. I also wanted to congratulate you on your level 2 analysis. I'm not sure if anyone saw the name strap.
Oh, well remembered.
MSTA.
I am an official MSTA. I did.
What does that mean?
It means that I am a technician. Oh, thank you. I was so excited, but we had, launch of crypto coming up, and also that Milan trip that I didn't get to actually explain it to everyone properly. So thanks for remembering. It means I'm a technician now, a member of the STA. And as long as the company renews my membership, hint, hint. But it was a really difficult exam, the hardest exam I've ever done in my life, really. And I have done a master's as well. But it's the sheer length.
You know what you're talking about then, you're not making it up.
Just winging it.
Yeah.
3.5 hours in total with 2 cameras and vigilators and everything. But everything is written. So there's no MCQ, there's no, I'm going to talk around, you literally type.
You can't just work it on ChatGPT like Poppy.
Like
I'm
Poppy.
not happy about this, by the way. I work very hard to guess the chart.
Yeah.
It's difficult. The chart's got to be known but not known. And then you're using ChatGPT.
Yeah, Poppy, we have an issue with that. But,
banned.
don't be so harsh. Don't be so harsh.
We need this.
Poppy, I think you can be unbanned just for this one. But no chat GPT. But yeah, I mean, it literally was a 3.5 hour exam, half an hour because you have to log in, make sure the cameras and everything are working. But it tells you everything from explaining the Kondratiev cycle to giving exit and entry points, to understanding patterns, understanding candlesticks. And if you want to see a series I've been developing, you can go. I'm going to whack up my chart here. F9, F11. You can't see that because you're in here with me. But yeah, I'm just going to show you the shorts here. And when you go down here, you can see technical tips, right? There are 4 so far. There's me looking quite scary with a hammer because I'm explaining.
This is just self-publicity. You're a narcissist, and
showing you where it lives because a lot of people don't know. And you can also find our pre-market, which producer Phil kindly records for us.
I do, yes.
And posts it. And I'm also going to get a microphone and a proper camera soon. And
Have you heard of Amazon next day delivery?
Yes, I then had to go to Milan.
Yeah.
Speaking of Milan, I have a lot of stories for you when these guys got me to do a live hit from Milan.
Well, I was forced into it when I was in Menorca, so it was more like, this isn't fair, this is my week off.
It's payback
anyone
time.
that takes a week off, we're basically dragging back onto the show. So
payback time. So that live hit, trader friends, when you saw it, everyone's like so impressed. Wow, she's managed to even find an Italian flag behind her.
It's my favourite country. So I proposed to my wife.
Oh, wow.
Obviously.
Wow. The food is good. I cannot knock their food. Coca-Cola, 1 can, €6. But I'll forgive them because...
Espresso, €1.
Yeah, so that all's forgiven, all's forgiven.
Exactly.
But that flag took me 30 minutes because the first stand-up location that I had, I prepped it, Wi-Fi is good, everything's fine, was in front of the poolside. And then what happened? They bumped up the Italian pop music.
Italian pop music?
Yeah, it was like espresso macchiato, you know, that Eurovision vibe. Yeah, it was just like, I cannot hear myself think.
That sounds awful.
I found another place by the side of the street with a nice background of the city. And what happens right before I hit? Garbage truck. Beep, beep, beep. And I was just...
Welcome back to reality.
So yeah, it was the third location where I found the flag and I found everything which was the front of the hotel. Thank you, Per Samali. It sounds like you understand.
Yeah.
Broadcast.
Congratulations, Dan. We're all very proud of you. Very happy for you as well. When's level 3 then?
There's no level 3.
There's no level 3.
2 is the top. That's
2 is
it.
the top.
Done.
That's it.
Kirky, send me an email. I will send across the details to you.
Did IG ever finish the opinions trading course with Rich? I believe that's already up. That's on the YouTube.
Yeah, I think so.
Yeah.
It's on the same page again. I'm going to show it to you. And if you look at the same shorts page.
Don't bring the show back up on air, guys.
And under, yeah, videos, you can see all of the different videos that we've compiled there for you. And under playlists to your right, click on playlists and you'll see the playlists that we have to the right. It says Beginner's Guide to Options. You have technical tips for the full playlist, and I guarantee you it's very short. If my 9-year-old can understand the concept I am explaining, everyone can. I've made it super simple. And we've got the Trading Experiences and Decoding Crypto series that we've started here as well.
There we go. And yeah, the options course, Beginner's Guide, back soon. So yeah, we'll just kind of allowing video flow, so we're not overloading you with content. So that's part of that. So yeah, date first in the description. It kind of messes up what people are searching. That's the problem. So I don't like saying no to people, but
I know.
we can't accommodate for that. I'm sorry.
We're yes people here. We're yes
we are
people.
yes people, and
we?
I do like to be flexible. But it would just kind of mess up a few things that we kind of try and help with background. So sorry, R6 Senna, but we can't facilitate that. Someone asked about Ryan Mattel earlier.
Yes.
That we've not gotten to.
Yeah.
I think that was...
Who was it? Before we get to that, I just saw another message asking where can we find more on the course. If you whack up my site very quickly, this is the page for the Society of Technical Analysts, and here you can find...
You can hit full screen?
So
there's a problem that I have. I constantly berate her in her ear.
Yes.
To hit full screen. And she doesn't listen to me.
I do listen. It's just that I'm sometimes so busy on the other screen, it goes, off to full screens, another screen that I don't want, and then it ruins.
It's just gone on. It's gone on my left.
All of my platforms, all of my data. I have it in specific places so that my challenged eyesight can find it easily.
Back to the STA. So if people wanted to actually do that course and sign up for it, what do they have to do?
So what they have to do is go to the page and they go under Education, which is the top menu bar there. You can look at the home study course. That's the one I did, and I did that purely because.
So do you have to be? Sorry, you said you have to be a member to do it.
Well, you first have to apply for a membership, which is not the same as a member. You have to pass
it's not like
two.
joining Netflix.
No, you have to pass 2 levels.
Sure.
Level 1, level 2, which I have before getting that. But you need to have paid. I think it's like £80 before you can pay for the actual course itself. And there are 2 levels. Yeah. One of those, yeah. And you can see here on the home study course, a home study course, it takes you through, you know, what you have to do. It's quite detailed, I have to say. Who should study, course objective, syllabus, and facts.
1,400 quid?
Yeah.
Bloody hell.
It's a lot. And it tells you about the objective, right? There are some self-tests that you can do. The first level is multiple choice, but it's written in a very, very clever way in that you could easily get it wrong. Yeah?
Okay, so yeah, it's not...
It's not obvious.
It's not GCSE fluke it type of exam.
No, you can't cut, trader friends, you can't cut an eraser into a cube and put A, B, C, D. Yeah.
Yeah, I think for that cost, I'd want something that's a good exam.
Yeah.
Did the exam cover hemline index, whatever that is?
Hemline index?
It was one of Kondratiev's ideas. This is from Arthur Fox Haig.
Thank you, Arthur Fox Haig. I think it did briefly, but to be honest, I had so much in my head, and I knew that the tricky bit wasn't the writing, it was actually the charting. That I spent a huge amount of time just, you have to, I bought an extra mouse, I bought an extra cordless mouse.
You bought an extra mouse, but the mouse you use still clicks a lot. Where's our silent mouse?
Yeah, where is our silent mouse?
Okay.
I'm looking at the studio, but you're here with me. Where is my... The one that IG has given to me is very, very noisy.
Right, we'll go sort that out later.
Very noisy.
We'll also
try and get... has retracted lots of messages. Why is that?
We'll also try and get to a new bell. I can hear Esar in my ear, and I know Esar loves coming on the show. So, yeah.
Yeah.
Thank you,
yeah, very quickly about the bell. We will have an update on that, won't we, Phil?
The bell's not bad. My problem is people don't ring the bell properly.
I ring it properly. By the way, what happened to the bell whilst I was in Milan? Because the sellotape in here...
That's been like that for 6 months. You've just not paid attention.
No, there was something in here. I swear to God, there was like a little...
No, I took that out.
Why?
Because we have to fluke it because of the way sound works. That's a door mount, and yet people bang it like that. Just... We do fluke the sound. I'm sorry. I've announced the falsity of TV, but that's TV. Right. Anyways, I've had enough of this. It's getting a bit hot, and I'm in a corduroy shirt.
It's getting a bit hot. You've only been here for a few minutes.
I'm in a...
Poor Rich and I are in here like
I just
hours
do this to have a bit of fun.
On end.
Yeah, that's your job.
Yeah, Shrimp, Fred, and we've told you about where to find the options course, where it's handily collated. Phil Arsak saying, please, can you put date first and description of the YouTube sessions?
We already answered that.
Yeah.
Right, time to go. We're 2 subscribers off 900. Please make our day.
Come on, 2 more subscribers.
If we can get to 900 subscribers before the end of the show. If you are out there watching and you're not subscribed and you're just freeloading our content of all the effort that we make, then please do subscribe.
Don't freeload.
Don't be a freeloader. Please subscribe.
We work very hard here
make our
in the heat.
And yeah, we'll bring you back more. We'll have some more updates. I'll come back again soon. Thanks, Adriange.
Yeah.
I'll see you guys soon. Have a nice weekend as well.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hey, welcome back. It's Issa here to take us through the key tradable risk events in the coming week.
It's funny, like this time last week, we said that it was going to be quite a quiet week, low event, but at the same time, often people say sell in May, go away. And that was kind of your last chance to sell in May. And actually, this week has been chaos. Like, were you following all the Twitter drama last night?
Oh my goodness.
It was mad.
Rich and I did a Trump, I was Musk, he was Trump.
Oh, you did the right role play? That's
the role play thing, which our viewers also chimed in as well. It is like something to behold.
Yeah, it's mad.
Especially like, you know, in a public sphere, in a time when, you know, you never expect this from...
Yeah. But I was like literally on my phone and I was like, what is going on? And then you just get notification after notification. It was crazy.
Yeah.
So I think this week is a week where I'm sure that drama will continue. And I know there's a call today between Elon and Trump. There might be a sort of
Politico.
reconciliation call, but let's see. But actually the coming week actually does have a bunch of data for the US and a couple of earnings. So I thought we would maybe talk about those. We're largely past earnings season, but there are one or two names that maybe we'll talk about. So I don't know, Phil has very kindly put together a slide for us.
A slide? That is my... here we are.
So for the US, I think let's start with the US. We have non-farm payroll today.
It's the elephant in the room.
Yeah. So we'll see what the job numbers look like. We've had kind of mixed signals on jobs.
We have. And also the recent data out of the US, you know, has been weak.
What do you think of the current, because we had JOLTS data that was suggesting actually pretty strong job openings, but then we had like other labor market data that was suggesting quite weak payroll data. And so I think it's a bit of a mixed picture, and I think seeing where NFP lands today will be quite an interesting data point.
Yeah, and what it means for the Fed, right? I mean, is it going to a weaker than expected number? Is that going to reinforce expectations of this Fed rate cut to come?
And I think likewise with the CPI data we're getting next week, right? Like looking at what that data will be will kind of start to guide the direction of what the Fed can do, because we've had several cool prints in a row. I think the coming data next week is a very kind of mixed bag, because like May has been a really mixed month. You had some of the front running of the tariffs, and then the tariffs kind of got undone, and so it's all been a bit back and forth. And I think we'll actually probably have to wait one more month
before we get clarity,
before we get real clean data. But I think either way, next week's CPI data will be kind of clarifying for what the Fed will have to do.
What I find really super interesting about the recent data that we've had out, yes, it's been mixed. Yes, you know, we've had, you know, up arrow, down arrow, and that ADP number as well. And that
the equity markets don't seem to care, right?
They
just seem
don't.
to truck along.
Yeah, chugging along like a, you know, freight train with a lot of momentum. And we even talked about this earlier on in the week. You know, can Trump continue to do what he's doing? Even with yields on the longer end being high, can he continue to do it because markets are holding up, right? Markets are holding up.
But it's almost like a kind of weird negative reinforcement, which is like, if the markets are holding up, then he can do anything, right?
I can do anything.
Do you want to pull up the Fed Watch tool just to see? Because I think this is one of those things where, like, jobs data, inflation data, if the world was still a very Fed-led world, we would be seeing the Fed movements really start to...
You want to compare?
Let's compare, and then maybe let's go out to like September or October. I think that's where the
that's when it gets interesting for the labor market. I think that's when we start, you know, seeing real pain coming through.
Yeah, so
look at that.
Like, look at that. There's just like no certainty at all.
Yeah.
That's crazy to me. Like it could basically be as low as like 275 basis points versus 400 basis points. It's crazy.
Yeah. And you're right. I think we are going to. This is not going to be a very clean month.
Yeah.
And then we start seeing clarity.
Where do you think this will start to like land eventually? Maybe even if we go to maybe the July date. I think the July date is an interesting one.
Yeah.
Because I think you're in September 26. So if we go to September 25, that's yeah, exactly. You can see this is like a couple of months from now.
Yeah.
It's not that many meetings away, right? It's 3 meetings away.
And this is the July.
Yeah, look how much.
versus
Look at the
September.
light blue bars versus these dark blue bars. We're seeing like quite drastic moves.
Yeah.
And I think it's just because there is quite a lot of uncertainty. And I think if you look at the bond yields on like say 30-year US government bonds, we're seeing quite a lot of bear steepening kind of sentiment, right? So
Let's see where they are now, because I had it set up earlier before you came in.
Yeah.
And last I checked, it was starting to creep up again.
I mean, we were at 5% on the 20-year and 30-year, which I think is like really highlighting the fact that the bond market is in a position where one of 3 things is true. Either, number one, they're concerned about the debt.
Yeah.
And especially with the bill, the big beautiful bill that's going through, like that is driving a lot of concern.
There you go.
I
I'm
think
going to highlight it for you guys in case you...
look at that, yeah. Or they're concerned about persistent growth in inflation, which is actually a very different story. Like, do we think inflation is just going to be around for longer? Maybe the tariffs will contribute to that. That would also push up bond yields. Or it's a mix of both of those things, and maybe with a sprinkling of the fact that the US government risk premium is a bit higher than it has been historically. But like, that's crazy. What is it, 4.9, 4.87? Yeah, 4.87 on the 20-year. And that's down like 20 basis points. So it's just, I really do think, 2 basis points, but still. But I do think we're in a position where the bond market, like the so-called bond vigilantes, are going to start to come out to play, because it's looking not great.
It's not. But yet again, you know, Trump's managed to, for some reason, keep markets, you know, on side somehow. And
And it's like, and as these bond yields have been going up, you haven't seen the markets respond at all.
Yeah.
And so I guess no one really cares what the Fed's doing, kind of, at least for now.
That's a suggestion, right?
Yeah, which is interesting, and I think I think it'll be an interesting one to see, especially next week. Once we've had jobs data, we've had the CPI data, does that shift, or does it stay kind of broadly the same?
Yeah.
So, okay, that's the US.
Yeah.
We also have some earnings for the US.
Yeah, so we have Oracle, right? Let's whack up that
Yes.
chart again.
Yeah, so if
Producer
we pull
Phil.
up the slide, the 2 that I had flagged, it's a relatively quiet week for earnings. There are some earnings in Europe, but really the big ones are in the US, which is Oracle and Adobe. And I think the reason I pulled these up together and I thought they were interesting is that these are 2 sides of the AI kind of debate, where you've got Oracle doing a lot of the infrastructure providing, and Adobe one of the application layer services that provides image-related kind of Adobe services.
Yeah, so let's just want to celebrate one thing whilst you've been talking. Clearly it was because of Issa. We have just hit 900 subscribers.
Hey, that's me.
Thanks to Arthur Fox Haig as well for saying, come on out, you lurkers. Subscribe. Can't you see these guys are working under conditions that, you know, require new studio, new bell, we've just shown them the fan.
The bell is very funny. It's been in kind of a state which is becoming more and more tape as the show goes on.
More gaffer.
Yeah, exactly.
More gaffer. Oracle is out Wednesday. Just a reminder to you trader friends, after the market close. This is some quarterly results there. And Adobe scheduled out after the close on Thursday.
Yeah, it's a late one in the week.
Well, Adobe's guidance is going to be interesting because, you know, the previous earnings, it said that it's got clarity now over, remember the scandal over how it's going to license its product when it's binding so many other images and resources, right? And whether it had the rights to in the first place.
And I think it's, by the way, that IP issue is an issue plaguing a lot of AI providers.
Yeah.
I think like you've got the New York Times suing OpenAI and a whole bunch of other lawsuits. I think one of the things that is really interesting for me with Adobe is looking at how they will think about existing in a world where companies like Meta are going to try and provide end-to-end services for people who want to do marketing, for example, where they will be generating the content themselves and the creative themselves to then run on their own platforms.
That's right.
And actually, that puts a lot of pressure on Adobe. And so I don't know if you've seen any of the push recently, but Adobe has been doing a lot of push for Adobe Express, which is this mobile app they have that can be used by consumers and retail to kind of play around with images. And I think that's an acknowledgement there that some of the demand from like existing marketing providers might not be quite as strong in the future, and so then they have to do a bit of a pivot to these kind of consumer and retail users.
Right. And that is, you know, something that we're already seeing play out even on our own WhatsApp or on apps in terms of...
You're seeing AI everywhere, right?
Yeah, and I'm sure at some point, once they see what we're using the most of, we'll suddenly get a subscribe for $2.99 per month, right? Here's how to collate your pictures beautifully, all done for you by the album.
Yeah, and Adobe's quite famous for this kind of like semi-freemium model where they try and do very, very basic and if anything quite difficult to use versions of their product, and then they stick all the good features behind a kind of paywall or a subscription.
Yeah.
I was someone who a long time ago used to be a big user of Photoshop, and then the annual licenses were just brutal.
Yeah, it's crazy.
Yeah, really crazy. Right, so we'll see those two earnings. And then the final thing to flag is we have a couple of countries showing GDP data next week.
Yeah, UK being one of them, right?
Yes, so UK and Japan. And I think in these instances, that is just more information to think about when we come to central bank decisions and exchange rate stuff. So I know in Japan in particular, we're going to get, technically I think we're going to get the data this week on Sunday night while we're all in bed.
Yeah.
But I think the market...
early Monday morning.
Yeah, exactly. The market will be reacting to it on Monday morning. The UK GDP data coming out later in the week. It'll be useful and interesting to think about how central banks will respond. We've seen the ECB continue to kind of cut rates. The UK's been a bit hesitant. And so I guess we'll see what the GDP numbers look like. Japan has been caught in a lot of the carry trade dilemma, where you've seen demand for Japanese government bonds be very limited to a point where the central bank has had to step in. I think seeing what the GDP data will look like, I think will really inform what those bond yields in Japan will do.
Yeah, totally. And I'm really interested to find out how the data plays out in terms of domestic demand, which has been strong, right, in Japan, versus the whole tariff uncertainty, you know, external demand weakness, and how that plays out with, as we all know, we've had several IG members come back from Japan recently. Aren't you meant to be going as well?
No, my partner and I want to go to Japan.
It is like heaving. Everyone I've spoken to.
I feel like flight tickets are so expensive because the exchange rate is cheap, and so people want to get there and enjoy living the good life.
Yeah, and Japan is like tourist destination 2025, you know. My brother said that you can't actually take a photo without anyone in shot.
Oh, really? Well, now you have AI features.
Get rid of it. Yeah, but they'll leave a leg or something.
Yeah.
GDP. I watched the panorama piece, and if you, you need a strong glass in hand.
Oh, really?
But it's really cool. It explains how, you know, our debt burden for the UK.
Oh, God.
This is good for those of us that watch, you know, the bond markets. We talk about the bond vigilantes here. Yeah. How in the 40s, you know, it was only like, you know, 40% of GDP, and then
we're now well over 100, right?
Yeah, and it's like 80, and then post-COVID went up even more, and then after the whole trust thing, it went up even more, and now, yes, you're right, we're close to.
And it's not quite as bad as the US, right? Where you're seeing more being spent on interest payments than on defense. And it's not like the US doesn't spend a lot on defense, right? Yeah. And so I think
what's interesting too is the debt repayments.
Yeah.
Dwarf. I mean, it's just so huge compared to what we spend on defense.
Well, of course, right? And I think as we go into next week, we've highlighted what are some of those concrete data points and those concrete like earnings moments that you might want to look for. I think the elephant in the room is the fact that there's a whole bunch of things that will change markets that weren't on that slide, and those include things like what happens to the big beautiful bill in Congress, what happens to the Trump-Elon situation, do they cut any trade deals? Because we're now like a month away from the end of this pause.
The 90-day.
Yeah, exactly right. This original 90-day pause. Is there going to be any news on that? Is it going to be extended at all? We saw that the US actually sent a letter out to countries basically saying, if you want a deal, I would start getting on it pretty quickly. And I can't tell if that is a clear threat or if that just feels super weak from them because they're not getting the demand that I think they thought they would in terms of trade deals. And so I think a lot of the noise and news will be stuff that isn't forecastable or planned. And so I think this is just one of those environments where you just have to kind of annoyingly stay a little bit loose and up to date with information as it comes in and try to respond in a kind of a live way.
And on that note, because we have a few minutes left, I know that SR is going to be on a beach holiday quite soon. And as you've seen recently...
Start of July, so I still got a couple of weeks.
Well, you know, we here at Trade Live with IG want to always, you know, be attuned.
Correspondence on the ground.
Yeah, we're spreading globally, right?
Yeah. So wait, when you were in when you were in Milan, did you feel like you were seeing stuff that you just wouldn't have been able to see while in the UK? Were there any like kind of data points that really like resonated? I know you've spoken about Coke prices.
I did. I spoke of Coke prices.
Yeah.
Martin, and you asked me about inflation.
Yeah.
Certainly, yes, Milan is a tourist hotspot, and yes, it was during the summer season, but it does feel like inflation.
It felt extreme.
Yeah.
And like the ECB's cutting.
I know, right?
It's just kind of nuts, right?
Yeah. And
so do you think they're making a mistake cutting?
Possibly, because it's not as if people. I like when I travel. I like going to real Milan too. I don't just stay in the
tourist spots. Yeah.
I'm that person that when I go to Amman, I don't want to just go to Amman. I actually go to. I got someone to take me to a Syrian refugee camp. I want to see it with my own eyes.
Yeah.
Right. We were escorted. Everything was super safe, right? And I have friends there, so I didn't like take crazy risks, but I wanted to see for myself.
Sure, yeah.
And just looking at the local people with the prices on local mercados.
Oh, really?
We're not talking like Carrefour Express, right? We're talking
yeah.
about that little shop that sells fruit, whatever. They're still selling, a punnet of grapes for. 7.99 euros.
No.
That is not cheap. That is not cheap to anyone. I mean,
what was the like sentiment like? Did people feel like, was there optimism? Did it feel vibey, or was it kind of a bit, everyone was a bit on edge? Or
if you're kind of not in the tourist hotspot, then people aren't really, you don't feel that optimism kind of coming through. I was surprised though. I always look out for these two things as an indication.
Yeah. What are your soft indicators?
Soft indicators. Chinese tourists.
Okay. Yeah.
They weren't that many.
Okay. Well, that tells you a lot about China GDP data. Probably. Yeah.
There weren't that many in a country that is absolutely throwing their arms wide open, right?
Yeah.
They had banners, and even my kids like, why is there always every Prada, every Gucci, every Fendi, why is there always a woman that looks like you on the advert?
Yeah.
Because we buy 1 in 4, not myself, but the Chinese buy. Is it like 1 in 4?
1 in 4 luxury bags or something. Yeah.
Something crazy like that. Every university advert that I saw, come study in Italy, had a Chinese looking person.
Wow. So okay, that's signal one. What's the final?
The second signal is the number of Saudis, Emiratis were not there. They were just not there. In their summer months, they escape the heat and they come to here or to Europe.
Interesting. So it's almost like you're getting more signals about global GDP than you are about maybe it's
the local. Yeah.
Interesting. Cool. On that note.
We're going to get you to call in when you're by the beach.
When I'm in my on the beach.
Yeah, on the beach.
Yeah.
Have a great weekend, guys. We will see you bright and early on Monday. So if you're from Germany or France and you're on holiday, still tune in because we are still where the big markets are. We are still live on that day. Any questions, send them across. And thank you for getting us to 900.
Yes. Have a great weekend, everyone.